Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook on the various cross asset classes, let's have a recap of what has taken shape yesterday in terms of events, data, and as well as the performance of the global markets. So yesterday was a rather quiet day, no major announcement of news or data during the European or the US session, and we kind of have a rather, we call it lackluster performance in the major US stock indices, as well as also spreading towards the rest of the European index as well during the start of the US session. So towards the end of the US session, I would say the underperformer still remains the Nasdaq 100, down negative 0.37%. That's also dragged down the SPX 500, down negative 0.11%. The Dow Jones Industrial Average slightly almost unchanged with a gain of positive 0.12%. And the worst hit was the small cap Russell 2000, down negative 0.81%. And what we could see over here is that the dollar was also almost unchanged. The dollar index almost unchanged, very similar with the 10-year US Treasury yield as well. Gold managed to add a slight gain of 0.17%, while the West Texas crude oil, WTI crude, pardon me, down negative 2%, but managed to actually help at the 200-day support moving average, which is coming to act as a support at around the US $77 per barrel. All right. So with that, market seems to be more awaiting for something to actually take shape today before it starts to actually decide its next significant directional move. So if you look at the US 10-year Treasury yield, let me share with you all on my screen. Okay, where's the, yep, over here. So if you look at the US 10-year Treasury yield, yesterday was also kind of a lackluster movement, almost a small little body candlestick, still trading below 4.14%, 4.14%. So this is slightly below the 200-day moving average. So 4.14% was the former swing high area over here that took shape in 18th of Jan to 24th of Jan, and it has been broken down late last week. Okay, and prior to that, a break below the 200-day moving average as well. Okay, so something to look out for, 4.14% today. And if you look at the 200-day moving average, okay, so this is the key intermediate zone for today, resistance zone 4.14% and 4.2%. And so this 4.2% correspond to 200-day moving average, and as well as the upper boundary of this descending channel that is in place since 23rd of October last year. So given a kind of a less directional bias movement on the US 10-year Treasury yield yesterday on an intraday basis. So that causes also a bit of sideways movement on the FX market as well. So if you look at the dollar index, so the dollar index almost closed unchanged yesterday. All right. So going forward over here, I do expect a bit of a mixed performance, at least on an intraday basis on the FX market. So let's us now jump straight to the FX market. All right. So FX market at this juncture, so let's start with the euro dollar. So the euro dollar continue to actually be firm. That means euro strength against the dollar. what we highlighted two support level for yesterday is that the first support level to watch will be at 1.09 level, then followed by the short-term pivotal support at 1.0890. So what we could see over here is that the euro dollar actually managed to came down, pull back, and shape that slight rebound. All right, and what we could see over here is that the hourly RSI also right now during the Asia session managed to actually inch up higher. All right, and also if I were to actually draw a trend line, okay, there's this trend line support being supported, and right now it's heading back above the 50 level mark. So indicating to us there's some signs of short-term bullish momentum coming back for the euro dollar. That means supporting euro strength against the dollar. So with that, right, I do not want to tight the short-term pivotal support to at 1.09. So I'll still be using 1.0890 to maintain our short-term bullish bias on the euro dollar for today. First resistance to watch 1.0970, followed by 110 figure level, which is the upper limit of this minor descending channel that I drew from the low of 14th of February. However, only an hourly close below 1.0890 will negate this bullish tone to see the extension of this minor corrective pullback that has taken shape since last Friday to expose the next near-term support level at 1.0845, which confluence with the 200-day and the 20-day moving average, all acting as a similar level as well, and plus the 50-day moving average, right, at 1.0845. Okay, so before I jump to the sterling dollar, perhaps let me expand my screen so that you could see more clearer. All right, so now what we have over here is the British pound, the sterling dollar. So if you look at the sterling dollar at this juncture over here, it's actually also shaped that pullback, and after that pullback, what we could see, it managed to shape that rebound of the short-term pivotal support that we highlighted yesterday, which is at 1.2785. Okay, so no change, still using this 1.2785 as my short-term pivotal support level, still maintain that bullish bias as long as this level holds. First resistance level to watch will be at 12880, then followed by 12940. Only an hourly close below this 1.2785 will invalidate this, not say, I would say negate this bullish tone to see the continuation of this minor corrective decline extension that took shape from last Friday to expose the next near-term support level at 12730, 127 figure level, which correspond to the former minor swing high area of 22nd of February. 26th of February turns the pullback support, and right now also the 50-day and the 20-day moving average also acting as a support at this 127 figure level as well. Asia Pacific currency, dollar yen. So if you recall, dollar yen yesterday, we actually flipped to a bullish bias to anticipate that minor corrective rebound scenario. That means we talk about a short-term minor mean reversion rebound scenario after last Friday's steep fall. It actually took shape. Okay, it actually taken shape right now during the Asia session, and the resistance that we highlight to watch will be at 14770, 14815 level, which is also correspond to the 50-day moving average acting as a resistance, and the 38% Fibo retracement of that prior steep sell off that has taken shape on last Friday. Okay, last Friday, 2 weeks ago. Okay, and last Friday was the steep sell-off as well. So what we could see over here is that it's coming very close to the mean reversion rebound resistance level that we expected. So we do still see a bit of residual push up going forward over here, but in terms of the reward risk ratio and also in terms of the RSI. So the RSI has already inched up after that bullish divergence and so coming very close to the overbought level. So I'll be using this region over here to flip back to a bearish bias. That means, i.e., we may, in terms of the sum of odds, it seems to us that over here at this point in time, not much meat left for that mean reversion rebound scenario to take shape. So I'll be using this mean reversion rebound tail end at this 14780, 14815 level for me to flip back to a bearish bias to see the continuation of this minor downtrend scenario for the dollar yen to take shape back again That means, i.e., for the bearish impulsive sequence of the minor downtrend phase for the dollar yen to actually starts to unfold back again into the picture. So I will not use the 14815, 1447, this zone here. That means this zone on my screen as my short-term pivotal zone for today. I'll have a bit of excess at 14880. So what's 14880 is actually the 50% Fibo retracement, and also graphically this is the former minor swing high of 6th of February, and 19th of January now turns into a resistance level. Okay, so we have two clear graphical area and also the Fibo retracement level 14880. So in any case, any potential appears up above 14815 level, as long as it didn't surpass 14880 level, we will be flipping to a bearish bias for today on the dollar yen. First support level to watch will be at the 200-day moving average at 14620, then thereafter followed by 14550. Only an hourly close above 14880 will see the extension of this mean reversion counter trend rebound scenario to expose the next resistance level at 14950, which is also confluence with the 20-day moving average acting as a resistance level, and this former minor swing low area of 15th of Feb, 29th of Feb, broken down late last week, now turns into a pullback resistance, or at coming in at 14950 level. All right. Now, Aussie dollar. So Aussie dollar, we will still maintain that bearish bias. So yesterday we were bearish bias on the Aussie dollar. So this Aussie dollar right now, as long as 66.50 short-term pivotal resistance is not surpassed to the upside, potentially we may start to see the extension of this ongoing minor corrective decline scenario to retest the 50-day and the 200-day moving average, acting as a support zone as well at 65.80, 65.60, which is also confluence with the former minor swing high of 20th of Feb, 23rd of February. You could see over here, very clear previous congestion zone, broke out, turns to a pullback support. And as well as if you look at last week's 5th of March short-term push up all the way up to last Friday swing high, it confluence with the 50% and the 61.8% Fibo retracement as well. All right. So as long as 66.50 short-term pivotal resistance not surpassed to the upside, still potentially maintain this short-term bearish bias on the Aussie dollar for potentially unfold this continuation of this minor corrective decline scenario, with the next support level to watch at 65.80, 65.60. Only an hourly close above 66.50 will invalidate this short-term bearish bias to see the potential push up to expose the next near-term resistance at 67.10 on the Australia dollar. Then now moving on will be the benchmark stock indices. So let us start with the Nikkei 225. So on the Japan 225, yesterday we were bearish, looking for the support level, the first support level to come in at 38,100, followed by 37,360. So price action almost hit the 38,100, printed a low during today's Asia session at 38,318. Okay, so upon printing this low, the RSI managed to shape this bullish divergence right at this oversold region. So indicating to us that yesterday's sell-off has started to lose momentum. So right now we may start to see a counter trend rebound scenario. That means a mean reversion counter trend rebound scenario. So with that, right, I'll be, okay, let me change this. Oops, sorry. Let me push this different down. Okay. Okay, so given this short-term positive technical element that potentially advocate this, we call it a potential short-term mean reversion counter trend rebound scenario that is maybe playing out within its minor downtrend that is still intact. Why is it still intact? Because it's still below the 20-day moving average that has broken down yesterday. So with that, I'll be using 38,100 level as my short-term pivotal support for today to maintain or to advocate for this potential minor mean reversion counter trend rebound scenario within its minor short-term downtrend phase. Resistance level to watch will be at 38,960 slash 39,210 level. Okay, 210 level, which confluence with the 20-day moving average, and as well as the pullback resistance of this former ascending channel support from 8th of Jan 2024 low. Okay, and after above 39,210 expose the next resistance level at 39,640. Okay, and also 39,210 level if we take into account of the Fibo retracement of last Friday's sell off to today's intraday low in the Asia session. It corresponds to the 50% Fibo retracement. All right. However, an hourly close below 38,100 will invalidate this short-term mean reversion counter trend rebound scenario to see the continuation of the impulsive down move within this short-term downtrend phase to expose the next near-term support level at 37,360, which is also confluence with this upward sloping 50-day moving average. Okay, Hong Kong 33. So Hong Kong 33 yesterday managed to break above the 16,600 level. Okay, this key support level over here. So with that, right, I'll be using this level here. Okay. Oops, sorry. Let me copy, paste. Okay. 16,550. Okay, so I'll be using 16,550 as my short-term pivotal support level for today. Flip to a short-term bullish bias to see the continuation of this counter trend rebound scenario to play out, that is within the low of 22nd of January, since the low of 22nd of January to going to play out within this ascending channel. All right, so next resistance level to watch after 16,860 will be at 17,010, 17,130 in the first step. Only an hourly close below 16,550 will invalidate this short-term bullish bias for today to see another round of choppy decline to retest the 20-day moving average, I think, as a support at 16,290. Okay, 16,290, and also confluence with the lower limit, the lower boundary of this minor ascending channel that I drew from the low of 22nd of January. Okay, so flipping to a bullish bias again on the Hong Kong 33 with the break of that 16,600 yesterday, today, and using the 16,550 as my short-term pivotal support to maintain to advocate for this potential short-term bullish bias. Then European index, the German 33. So German 30 index, pardon me. So German 30 index going to evolve within this sideways range. So yesterday we highlighted a lower neutrality limit at 17,650 and it bounced back up again. So no change, still maintain this neutrality range scenario on the German 30 index, 17,900, 17,650. Then what we have for the US Wall Street. So US Wall Street yesterday, we do have a bearish bias. First support level to watch will be at 38,360, almost hit before shipping that bounce back up. All right, to actually remains within congested within this first resistance zone of 38,770 slash 38,850. So I'll be still using 39,100 level. Okay, so what is 39,100 level? Is actually the minor swing high area of 27th of Feb, 1st of March, and as well as the pullback resistance of this former minor ascending channel support from the low of 18th of Jan. So as long as this level is not surpassed to the upside, 39,100, we'll still maintain that short-term bearish bias on the US Wall Street 30. First support level to watch will be at 38,360 level for sure. We saw confluence with the 50-day moving average. Only an hourly close back above 39,100 will invalidate the short-term bearish bias to expose the next near-term resistance level at 39,400 slash followed by 39,610. Okay, then what we have on the Nasdaq 100. So Nasdaq 100 continued to plunge lower yesterday, retested the 20-day moving average before shaping a bounce back up during the close of the US session. All right, so still below that 38,950. That's my first resistance level to watch. Okay, but I don't want to use the 18,095 level, 18,095 level as my short-term pivotal support for today. Still using this kind of a minor, we call it range resistance, which we call it the potential double top resistance at 18,335. So as long as 18,335 is not surpassed to the upside, still maintain that short-term bearish bias on the Nasdaq 100. first support level to watch will be at 17,810 level. So 17,810 level confluence with two key elements, minor swing low of 6th of March and 29th of February, and as well as the lower boundary of this ascending channel that I drew from the low of 5th of Jan. Okay, only an hourly close above this 18,335 level will invalidate this short-term bearish bias to see the continuation of the impulsive up move, to expose the next near-term resistance level at 18,435/18,470, then followed by 18,565, 18,626 level. Okay, so that's for the major benchmark stock indices. Now, moving on will be gold. So spot gold yesterday traded sideways. Okay, holding above our first support level at 2175, trading sideways. So I'll be using no change in terms of the bias. So the uptrend is still intact from a short-term perspective. So as long as any potential pullback managed to hold at the 2153 short-term pivotal support level, we will still maintain that short-term bullish bias on spot gold XAU/USD. First resistance level to watch 2200/2210, then thereafter followed by 2220, 2230. Only an hourly close below 2153 will invalidate this short-term bullish bias to see the extension of this minor corrective pullback to expose the next near-term support zone at 2000-125, 2110. So this level here, if we do the Fibo retracement of this very steep up move from the low of 23rd of February all the way up to last Friday high, it confluenced with the 38% Fibo retracement and the 50% Fibo retracement as well. All right, West Texas Oil lastly. So West Texas Oil continued to remain sluggish below the 200-day moving average. Yes, it managed to strip a bounce, but thereafter it didn't break above the 78.14 level and just trade sideways throughout the entire US session. Yep, and going to Asia session as well. So I don't use 78.14 as my short-term pivotal support, pivotal resistance. Still use the 80.50 level just in case for any whipsaw. So as long as 80.55 level, 80.55 level maintains this surplus to the upside, so that will be my short-term pivotal resistance to maintain that short-term bearish bias on West Texas Oil. Next support level to watch in the near term will be at 76.20/75.75, so confluence 50-day moving average for West Texas Oil. So West Texas Oil is something like a bearish bias within a complex sideways range configuration. However, a breakup above 80.55 will invalidate this bearish view to expose the next near-term resistance level at 81.65, followed by 82.80/83.20. Okay, so that pretty much sum up for the short-term technical outlook on the cross asset classes. So what is the key data to look out for today, and in terms of event will be the all-important US inflationary CPI data, that means US CPI. So market participants will be focusing on 8:30 p.m. the release of the core inflation rate. So core inflation rate, market is expecting it to moderate slightly lower, 3.9% year on year from 3.6% that was printed on the month of January. So if you look at the trend of the core inflation rate data, it has been slowly inching downwards, inching downwards since a year ago. Okay, so if market expectation is being met at 3.7% year on year, that should actually doesn't change the picture of the Fed, we call it guidance, or the Fed signaling in terms of this, we call it first interest rate cut. So based on what Powell's speech testimony last week, so more or less the Fed is actually looking to cut, but not so soon in March or May, but is centering around the summer months, which is in June instead. All right, so unless we start to see a core inflation rate for today, I mean coming in way below concession expectation, that means way below 3.7%, that means i.e. coming at around 3%, then that could actually increase the probability of the first interest rate cut by the Fed to somewhere around in May. All right, so until that happens, so as long as it falls within market consensus, the Dow shouldn't change pretty much. All right, so with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.